Hi, welcome to my video lecture. So today we'll be discussing on accounting equation. So accounting equation, assets equals to capital plus liabilities. Asset is anything owned by the business, controlled by the business, and capital is whatever the owner brings into the business is capital, or also known as equity, and liability is whatever we owe to someone else. So assets can be current assets, which is also known as short-term assets, and assets can be long-term assets or non-current assets. So to qualify as a short-term or current assets or a non-current assets, they should be so if the assets is more than 12 months, so if the business will own the assets for more than 12 months, that will be a long-term asset or a non-current asset, because we will own the asset for more than 12 months. For an example, it might be vehicles, it might be machinery, it might be land. Okay, and for non-current assets, those are assets owned by the business for less than 12 months. Okay, so for an example, it can be cash. So that's my asset, but normally cash might flow out of the business in less than 12 months. It might be receivables. So someone owes me money and I expect them to pay up within 12 months or before 12 months. Similarly, liabilities can also be current liabilities, which is again, current liabilities is liabilities owned by the business or we need to pay up before 12 months. And liabilities can also be non-current liabilities. So it's very self-explanatory, because non-current liabilities and current liabilities. So which is non-current liabilities is something over 12 months. So over 12 months, it might be a bank loan, and for short-term liabilities or current liabilities, it might be some payables. So payables is our short-term liabilities. Okay, so assets and liabilities, we have we looked into them, and now let's see capital. Capital, or it's also known as equity. So capital is whatever the owner brings into the business is capital. Now let's see an example. Let's say Tom, he wants to start a new business and he brings in $50,000 in cash. So this $50,000, so what we said is whatever the owner brings into the business is capital. So $50,000 is capital, but again it's in the form of cash. Okay, so how the accounting equation will work out here is, see, assets equals to capital plus liabilities. So here, and as we said, like we had current assets. So current assets is anything which is owned by the business for less than 12 months. So cash is a current asset, and here assets equals to capital. Asset in the form of cash equals to capital. Asset 50,000, cash capital 50,000. Okay. And what about liabilities? Liabilities is 0. So we just leave it blank. Now we'll move on to a bit further. So assets equals to capital plus liabilities. We have 50K and 50K. All right. Let's say Tom thinks of buying some furniture, and which will cost him $25,000. So furniture, $25,000. Okay, now what kind of asset is furniture? Furniture is a fixed asset or a long-term asset. or a non-current asset. So why is it a non-current asset? Because it's not current. Normally furnitures will stay with the business for over 12 months. Okay, so what happens? The assets is now broken down into current assets and non-current assets. So current assets, we have 25k, which is cash, and non-current assets is again 25k, which is furniture. Okay, so the extended equation will be current asset plus non-current asset equals to capital plus liabilities is 0, so I'm putting a 0 there. That's 25k plus 25k equals to, we had 50k capital. So the equation balances. It's 50 here and 50 there. Okay, so we always need to be careful. The accounting equation should balance, or there is a mistake. Okay, now let's bring liability into the picture, and let's say Tom goes to his friend Jerry and he says, like, I need to borrow some money, can you lend me some money? And Jerry says, oh, okay, it's all right, you're doing a business, best of luck, I will give you 50,000. Okay, so that's a loan, 50k. So let's see how the accounting equation, what happens with the accounting equation. So it's assets equals to capital plus liability. So the total assets we had was 50k. It was broken down into cash and furniture. Capital, we had 50k till now. Now a new loan is coming in, 50k. So the accounting equation should balance, but here we say it's 100 and here we say it's 50. So this loan, it's coming in a form, so it's in the form of cash. So new cash is being injected on this side. So we'll add another 50k, that will make 100k on this side and 100k on the other side. So now let's move on. And so remember, we had furniture costing 25k. So let's see how we write down the journals. So before that, now it's the trickiest part, and most of the beginner accounting students really struggle with debits and credits. So we'll move a bit into debit and credit, and then we'll come back to writing the journals down. So assets equals to capital plus liabilities. This is the basic equation. If you remember what I'm saying you now with debits and credits, hopefully you will never make a mistake and you will never be confused with debits and credits again. Okay, so if assets go up, that's always a debit, and if assets go down, that's always a credit. On the other hand, capital and liability goes up is a credit, capital and liability going down is a debit. So if you only remember one of it, assets going up is a debit. On the other side of the equation, capital liability going up is a credit. So if you just remember the debit, you will always remember the opposite if it's going up, it's a credit. If you remember assets going down is a credit, then it's very simple. Capital or liability going down is a debit. So just remember this equation, and this is the best thing you will ever learn in accounting. Okay, so let's move on with our furniture example. So what happened was Tom bought furnitures with 25,000, right? So let's put that one into this equation. So furniture is an asset. So furniture is an asset. So what we said, assets going up is a debit. So we know there will be a debit coming into the picture. But again, how did you buy the furniture? You bought it from cash. So cash is going out to someone, right? Because you're paying by cash. So cash is an asset. So asset going down because you are losing the money is a credit. So furniture account, debit, it was 25K, and cash account credit 25K. You can also write in this way: debit furniture account 25K, credit cash account 25K. It doesn't matter, but what you need to understand is if it's right or wrong. See, furniture is an asset going up is debit, cash is an asset, current asset going down is a credit. Now we had the loan issue. So asset equals to capital plus liability. Assets going up is debit, assets going down is credit. Capital liability going up is credit, capital liability going down is debit. Okay, we had the loan issue. Tom took a loan from Jerry. So Jerry gave Tom $50,000 of worth of loan. This came in the form of cash. So there is a liability and there is an asset. So what happened is your loans went up. You owed people more money. So loan going up is a credit. What happens here is, so we always know there will be a debit and a credit. So if you find out one, the other will be somewhere down the line. So you'll have to figure it out. Loan came in the form of cash. So debit cash or debit cash account 50K, and credit loan account 50K. Okay, so we have dealt with asset account, assets going up debit, assets going down credit, capital and liability. Now we'll look into expenses and income. So expenses is of the same nature with the assets. So any kind of expense, let's say telephone expense, going up is a debit, going down is a credit. On the other hand, income works in the same nature as capital or liability. So income or sales. Okay, so when there is sales going up is credit, sales going down is debit. Okay friends, so this was just a certain video lecture. I just thought of making one because there were quite a few requests of uploading some videos, and I thought, like, let's start with something very basic which will really help you guys. And if you have any other requests, so just let me know in the comment, like what kind of videos you want and what is troubling you with accounting or finance or business subjects. I will try to make up some videos, very short one, very easy one like this, and I'll try to explain you there. All right, see ya, bye.